Hi, this is SG Financial 101. Today is about CPF related news. No change to CPF interest rate. Okay, this is the title from Mr. Tan Si Ling. Okay, let's look at this article from the Straits Times. There's no change to interest rate being paid out to CPF members, given that current bank interest rate continue to be below effective CPF floor rate, said Manpower Minister Tan Si Ling in Parliament. Okay, a lot of terms here, current bank interest rate and CPF floor rates. We will continue to analyze the facts and figures of this article, and we'll elaborate accordingly when we encounter this term. Responding to MP's query on whether CPF will increase its interest rate for the next few years to compensate for higher inflation environment, Dr. Tan noted that the 3-month average interest rate of three major local banks continue to be 0.09% according to CPF latest estimate, which is below the OA interest rate of 2.5%. Meanwhile, the interest rate for special Medisave retirement account, okay, SMI, this is known as the SMI, is pegged to the 12-month average yield of 10-year Singapore government security plus 1%. So basically, it's Singapore government bond, 10 years duration, but we don't look at the latest price. We look at the 12-month average price. Then we add another 1%. This gives us a figure of 2.72 in May and 3% based on the latest estimate. So based on 3% on the latest estimate, this means that actually 12-month average yield is actually 2%, around 2%. Then you plus 1 actually should give you 3%. What I'm trying to say is that for SMRA, this special medical retirement account, as we know, these three actually pay 4%. A minimum of 4%. So actually they are being compared to the 10-year Singapore government security. Right? So this is the benchmark we're looking at. So ideally for SMRA, it's going to be slightly higher than this. So as we know that actually this average figure even with plus 1%, is still just 3% now right now. This benchmark is still 3% right now, and SMI being 4% right now is still substantially higher than 3%. So actually, what the article is saying that actually there's no urgency to raise the interest offered by CPF SMI accounts right now. And then when we look at the OA interest rate, minimum is at 2.5%, and the benchmark is actually 0.09% only, because they are looking at 3-month average interest rate of the three local banks. Right? So given that the comparison with the benchmark, SMI is way beyond the benchmark. Not say well beyond, but since like the benchmark is like 3%, so 4% still substantial. 1% is quite a lot, because we are talking about 4% compared to 3%, still significantly higher. Then when you look at OA, 2.5 above 0.09, that is substantially higher, because like 0.09 is like still 0, because they are actually comparing to the short-term interest rate. So if we look at just use the DBS Bank for example, we can see the short-term interest rate for 3 months is actually quite low, right? Even they can vary according to the amount of capital. Even you put like say close to $1 million, you're still getting paid like even you put close to $1 million, you're still getting paid quite little. Not really a lot of money for the amount of money you put in, which is actually 0.05%. Yeah, so actually it's not a lot. So we actually, and it's kind of strange, because if you look at the banks, the banks actually give you less interest rate if you put in more money. So it's kind of strange right here. So actually, if for like say for 4 digit you get paid 0.15%, but actually for more amount of money you actually get paid less, and maybe they actually don't actually want you to actually deposit so much money with them to earn a higher interest rate. Okay, let's back to CPF. So we know that they are actually benchmarked with for OA is actually benchmarked with short-term interest rate. And they will explain the reason for choosing such a benchmark. Okay, because members always saving are liquid account. They can be withdrawn for home purchases and paying for mortgage loans and investment. And hence it's actually benchmarked to our fixed deposit, which is a fairly liquid instrument as well. So that is the rationale being explained here. Then for the SMRA. So as we know, CPF is kind of like a risk-free investment, SMRA. So they are actually compared to a long-term risk-free investment as well. So SMRA are designed for long-term. So we look at long-term investment, and we similarly was also a risk-free investment. It's actually the 10-year Singapore government bond. And this bond, when it was introduced, right, the government intention is actually using it as a benchmark, because actually Singapore has a lot of fiscal surplus. So actually the government does not really need to borrow money, as we know. So actually the purpose of the bond and the bond interest rate is to serve as a industry benchmark. And so to sum up on the key points of the article, the key points of the article is that since comparing to the benchmark, the CPF current interest rate is higher, there's actually no urgency to raise the CPF interest rate. And also another reason is that CPF interest rate are used to serve as a long-term guideline and long-term benchmark. They should not be actually used. They should not be actually compared to the bank interest rate, which is actually much more volatile. So we should expect CPF interest rate to be much less volatile and adjusted a lot less frequently compared to bank interest rate as suggested in the article. Okay, let's just look at this paragraph. There's some lag time in CPF interest rate adjustment to avoid subjecting people to unnecessary fluctuations. Those with HDB loans will pay the prevailing OA interest rate plus 0.1. So currently OA is 2.5, and initially 0.1 is 2.6. We also benefit from the stability. So ideally, if you have a HDB loan, if let's say interest rate suddenly shoot up, you will not be very happy about it because you will be paying more interest. And also, the CPF board will continue to review the interest rate. He added, in September, CPF board will announce the interest rate effective for the last 3 months of the year. Despite the low interest rate environment since the global financial crisis, the government has continued to pay generous interest rate due to the floor rate. And I think this is quite true, given that when the global interest rate was like near zero, this has been the rate. This has been always has been 2.5%, and the SMRA has been 4%. When actually when all the bank interest rate was near zero, right? So just because bank interest rates start to shoot up for the past 7 or 8 months, we shouldn't expect CPF interest rate to actually spike up accordingly, very drastically. But however, if let's say the overall market condition shows that actually interest rate continue to go up and stays there for quite a substantial period of time, then it will be time that CPF board will look into measures to change the interest rate accordingly. Okay, that's all for the news analysis. If you like my video, please subscribe my channel and help me to press the like button.